Hello and welcome to the Collective Shift channel. Matt here to share with you the biggest news from the macro economy and the crypto industry over the past week. And as always, I'll share with you my thoughts on the state of the crypto asset market towards the end of this episode. Starting as always with the Australian economy, and in the past week, the most significant news was the central bank, or the Reserve Bank of Australia, their decision in their monthly policy meeting to keep interest rates at 0.1%, which is an equal record low and is where it has now been kept for about 13 months now. And they also decided it will continue a $4 billion per week bond buying stimulus program that will stay put until at least mid-February, until they're likely to start reducing that amount and winding it back as the Australian economy continues to recover. There was a lot of anticipation on what the Reserve Bank Governor, Philip Lowe, would be saying with respect to the Omicron strain of the coronavirus. And he's saying here that yes, the emergence of it is a new source of uncertainty. However, the bank, or the central bank, doesn't think at this stage that it's expected to derail the recovery. So that kind of allayed some fears in the market, and you've seen that kind of mimicked and that kind of sentiment has kind of been consistent in many other countries as well over the past week with respect to the dangers and the unknowns of this Omicron. The lowdown basically is that it was feared to be a lot more dangerous at the start, and over the past 48 hours or so, 72 hours, you're starting to see some more leading figures, health officials and whatnot, really come out and say it isn't looking as bad as what they initially expected. Of course, these things can change once more evidence comes through and more data on the transmissibility and whatnot of the virus. But that's at least the state of play for now. All this is super important because, as we've seen in the past 12 months, the power or strength of this virus really has significant impacts on every aspect of society, particularly the economy. More significant news today from the Australian government, this time had a lot to do with crypto, was Treasurer Josh Frydenberg announcing plans for Australia to really go to the next level in terms of putting together some reforms with respect to the crypto asset market and sector, as well as other fintech areas such as private wallets or digital wallets such as Apple Pay, Google Pay, and also the buy now, pay later space. With respect to the crypto asset market and the crypto industry, this was in response to recommendations that were put forth by a Senate committee about in September, I believe. I did cover that if you did want to go back through my previous episodes. As you would have seen, there were about a dozen recommendations put forth to the federal government, and we've already seen here Frydenberg come out and respond to those recommendations. The majority of those were, agreed upon by the government, and they've at least agreed to, take those recommendations and at the very least explore, the possibility of actioning those recommendations, which is great to see that swift response. As we've seen here, there's a response in Frydenberg's speech to which particular recommendations here. So for those of you watching the video, you can see on my screen here, and for those of you listening to the podcast, I will drop in the link to Frydenberg's speech in the show notes. This is a lot to do with taxation of crypto assets, which I've said in previous all year and all of these videos, a lot of the time, just how convoluted that the tax system is, not only in Australia but many other countries when it comes to how to tax crypto assets. I won't go into it again in this episode, but there's just so many nuances which do make it confusing, and I think a really straightforward tax system in Australia of how to tax crypto assets would really help the federal government raise a lot more revenue, and it would also, I guess, calm down and really add some surety to individuals in Australia, citizens in Australia, who I guess can more confidently, work with their accountants or even fill out their own, tax returns and whatnot, now that we have a bit more direction on what to do with taxes and crypto assets. Also interesting here, there was a lot more, I guess, protections to do with users of exchanges, which was great to see. At least that's looking on the cards. And then also, interestingly, the federal government was open to, I'll say here, examining the potential for DAOs, or decentralized autonomous organizations, and really committed to looking into how DAOs could be incorporated into Australia's legal and financial regulatory frameworks. That was the biggest surprise to me, to see this, which was one of the more, I suppose, ambitious or left of center kind of recommendations a couple of months ago, and to see the government at least committed to looking into it and seeing how it could work was really promising. Because, DAOs, as I've covered in previous episodes, I do really think there is a lot of potential with them. There's still definitely a lot of issues that they've got to work through. However, the concept of it is, to me, super exciting, and has massive investment opportunities, yes, but I think more personally, I think there's also a lot more other promising, benefits from it, in terms of just, efficiency of getting work done, really, like collaborating on a vision and coming together to create some sort of outcome through the structure of a DAO, as opposed to having to set up some other legal structure like a corporation or a business or a co-op. So yeah, DAOs, as I've said in previous episodes, are going to be enormous year for DAOs, I think in 2022 especially, but also several years in advance. And it's great to see the Australian government really committing to, or openness at least, to seeing how they could integrate with Australia's legal framework, because at the moment there isn't really many jurisdictions around the world that have done so. I think Switzerland is one, and Wyoming, a state in the US, is really leading the way there with really integrating DAOs into their own regulations. So a big opportunity for Australia if they can continue to really push that moving into 2022. Also today out was from the Reserve Bank, also to do with crypto or digital assets, was they released their report, their research paper on doing some research and development on a proof of concept, so kind of like a pilot project on a wholesale CBDC. So a CBDC being a central bank digital currency, wholesale CBDC meaning that it isn't really something that you or I could use at the shops. That's called a retail CBDC. A wholesale CBDC is more to do with the connection between a commercial bank, say Commonwealth Bank of Australia, and the Reserve Bank of Australia. So that's what that kind of a wholesale relationship is. And so what the Reserve Bank here has researched with CommBank, NAB, Perpetual, and Consensus also helped them out. What they all were researching was how it could work, a CBDC, between all of the banks as well as the central bank as well. Why are they even researching this? What are the proposed benefits? The benefits here were really improved efficiency. So as we can see here by the assistant governor here, I may as well just read it out. Project Atom is what it was called. Their conclusion from this paper was that it demonstrated the potential for a wholesale CBDC and asset tokenization to improve efficiency, risk management, and innovation in wholesale finance market transactions. He goes on to say there was also some benefits from knowledge sharing between the institutions, and that the Reserve Bank, will continue to research CBDCs as a strategic focus area on supporting the evolutions of payment. So for those of you unaware, CBDCs are basically being researched by, I would say the majority of central banks all around the world. Some of them have actually put in pilot projects to actually kind of have some test cases of CBDCs in society and in the economy. China by far is always being pointed to as the most progressed and the most developed of all of the countries when it comes to CBDC solutions. And there's a lot of conjecture and speculation that the Winter Olympics in Beijing might actually be an event where China would want to, flex in a way and actually kind of release their CBDC a bit more of a real launch. I think so far they've done a number of pilot launches. So this is, it's all, a lot of people always ask me, what if this CBDC kind of comes to fruition, does that mean the end for Bitcoin? And to that, I always say definitely not. You'll expect to hear about CBDCs for the next decade in terms of research and development. Some of them will even implement it into society. Some will take a bit longer. Some of them you'll never actually see as a consumer, like me or you will never actually see them. I think a lot of central banks will go this wholesale CBDC approach. And then in association, you'll also continue to see the crypto asset market mature. I don't think it's a mutually exclusive thing. I think both of them can exist at the same time and continue to provide their own benefits to society. In terms of the stock market, some jitters last week, definitely. Some of the heaviest selling we'd seen in several months. However, as this Omicron kind of fears have subsided, as I said about 5 minutes ago or so, they don't think it's as bad as what it kind of initially was looking to be. So with those statements coming out, I think what's his name? The US health official, he was the one that really kind of allayed fears. I think a couple of days ago, Fauci, I think, Anthony Fauci, he said that it did not appear to be a great degree of severity with Omicron so far. So once he said that, the stock market, particularly the risk on assets, so the tech sector especially, really kind of rebounded strongly because they had been beaten up quite badly before the weekend. So that's basically the state of play in the markets. What's going to be significant for the rest of the week, wrapping up the macroeconomy section. I think we've got some comments coming out, or a speech tomorrow from Philip Lowe locally in Australia. And then on the macroeconomic data front, there's inflation data coming out in the US on Friday. That's Eastern time or US time. So probably overnight on moving into Saturday, Australian time. That's by far going to be the biggest data drop for the week, especially with inflation being all over the headlines. So expect there to be some volatility in the markets if that inflation data is a lot higher or lower than expected. Moving on to crypto and the biggest news for the week, just moving on to some fundamental, some adoption news. Had Gemini here partnering with Colombia's biggest bank to enable their users to trade crypto assets, so including Bitcoin, Ethereum, and as always, Litecoin seems to get in there for these initial first crypto assets that can be bought and sold, as you've seen me rant on about in the past. This is just another deal yet again with Gemini. I think Gemini is working with the Combank, so Australia's biggest bank, it sounds like a very similar kind of relationship and partnership. So got the biggest bank here in Colombia and the biggest bank in Australia now working with Gemini, which is, for those of you unaware, one of the biggest crypto asset exchanges and custodians on the planet. So this will really take effect in the middle of December. So yeah, great to see there in Latin America continued adoption of crypto assets. Continuing on with adoption news, Visa, they launched a crypto advisory service, in particular advising banks on how to, offer crypto asset services. So you got Visa, which has had a crypto unit or division for quite a few years now with Kai Sheffield. He's been leading the crypto team there at Visa for several years, and it's great to see now they're really, I guess, ramping things up and more formally offering this as a standalone service. So what do we got here? Visa has formed a global crypto advisory practice. Yes, they're helping financial institutions, so such as banks, develop their crypto businesses. And it's just, why are they doing this? It's just because of a response to demand for various crypto products from, bank customers. So, a Combank customer, continuing to want Combank to, really be able to buy and sell crypto, like seeing that in banks all around the world, and just seeing banks now really wanting to satiate that demand. And to do that, they need to work with people in the know, and Visa definitely is one that has worked with a lot of integrations over the years. So this was one of the biggest news for the week, mainly because of that reason of why they're even doing this, is because they've said it's in response to an increase in demand. And when I see that as the reason, that gets me super excited that 2022 is going to be a massive year. This was also one of the biggest adoption news pieces of the week. Ubisoft or Ubisoft, they excuse me for getting whichever one of those I got wrong, because I'm not really a gamer, but let's go with Ubisoft. They've become the first major gaming firm to step into the world of NFTs. So they announced earlier today that they launched a beta version of a new platform called Ubisoft Quartz, which allows users to acquire NFTs of items that can be used in-game, such as weapons, vehicles, or clothing. And this, importantly here, this NFTs will be stored on Tezos, which is a smart contract blockchain. It isn't actually what you commonly see. It's not Ethereum. So you've seen Ubisoft here really opting for a non-Ethereum blockchain, in this case Tezos, which it does have, from my understanding, a lot lower fees at the moment, but it also has less usage. So I'm not too sure there on whether, if you had Tezos having the exact same usage as Ethereum, would you see fees being the same? I'm not too sure there, but Ubisoft will definitely find out. I do remember Ubisoft getting into crypto quite a few years ago. At least blockchain. I do remember them releasing some sort of blockchain pilot game back when I did my news reporting in the industry. Let's just see here. They released back in 2018, so they have been thereabouts, at least dabbling in how they could integrate blockchain into their standalone gaming products. I'm not sure what happened to this Hashcraft blockchain game. However, it's great to see Ubisoft really continuing to, challenge themselves and see how they can integrate NFTs and make the experience better for users, and giving users more, ownership of their in-game assets and things like that, which is the big appeal there for gaming and NFTs. Saw Fidelity make some massive news announcements this week. So one of them, about 7 or 8, 9 days ago, was the first one was launching a Bitcoin ETF in Canada. So for those of you unaware, the US still hasn't approved a Bitcoin spot ETF. And I know Fidelity has filed an application, but very symbolically and significantly, in my opinion, they then, I'm not sure if they withdrew it, but they definitely then launched one in Canada And it's almost a sign now of just how ridiculous in many aspects it is that I suppose the stance that the US is taking is so different to Europe, to some countries in Latin America like Brazil, even to Australia to an extent, which hasn't released a Bitcoin spot ETF, but many other kind of crypto ETFs. So that was a big news there by Fidelity, which for those of you unaware is one of the world's largest investment or asset managers rather. So just a huge name, and they are based in the US as well. So another big news item as well involving Fidelity this week was them partnering with Nexo. So these two firms will develop a product suite and compliant infrastructure for institutional investors. So Nexo is kind of like a custodian as well as a kind of like a crypto loans provider. They kind of do a few different things, but Nexo, they're kind of in the same type of business as BlockFi there and Celsius. They're probably the three that are often referred to as like the CeFi or centralized finance or centralized crypto finance kind of players, at least for now. So seeing Fidelity partner up with Nexo definitely bolsters the reputation and the competitiveness of Nexo. So got just here, Nexo's client base will now be able to use its credit and trading products with reliance on Fidelity's custody and security solution. So yeah, if you look at this year, I can't believe how much more developed the institutional, infrastructure side of things has become. It's been super pleasing to see, and the likes of Fireblocks, they're another one, which is just another, behind the scenes company I really have just seen just ramp up their development significantly, and just institutional solutions. There's been BitGo was another that got acquired by Galaxy, and then all these exchanges as well are providing institutional services behind the scenes, such as like Coinbase. So definitely making it easier and easier for institutions to come into the crypto asset space, and that's something we've seen this year really significantly increase, and I think next year is going to be another big year in that respect. This was big news as well. Just wrapping up some of our big news for the week in crypto land. Facebook retreated from its crypto ad ban. So for those of you unaware, they had a long-standing policy that prevented most companies in the industry from, running ads on Facebook's social media platform. So that move has just come not long after Facebook or announced its rebranding of the parent company to Meta, which involved the metaverse and hints that it will use blockchain technology in parts of that metaverse solution. So it's kind of made sense for Facebook to then, it would kind of look a bit strange if they still banned most of the crypto industry from even running ads on Facebook, but at the same time they're kind of using the same technology. So that was really, really pleasing to see as well. So I think just it's more ways that users will be, made familiar with, crypto products and different crypto exchanges and things like that. Hopefully, I'm hoping that there are still some policies in place where they're not accepting, allowing ads from any crypto industry participant, like ICOs or anything to do with raising money and like tokens. That would be really dangerous in my opinion, and allow for a lot of easy scam activity. So I'm hoping they don't just let it free for all, but it's at least a very promising announcement, in the overall scheme of things. Continuing with adoption here, and just wanted to comment more on a continued trend I've noticed of crypto exchanges partnering up with AFL teams. So for our international listeners or viewers, AFL is Australia's biggest sport, So the Australian Football League, it's a kind of a native sport that's kind of a hybrid of a lot of different sports, to be honest. Rugby is probably often the most common kind of, I guess, thing it's compared to, or common sport it's compared to. But yeah, Independent Reserve was another one in the past week that partnered up with, this time, Sydney Swans, their club. So that's now 1 year ago. There was no sponsorships. This year there's been 3 that are made, and actually before this video I actually just saw a 4th one, believe it or not. So that's SwiftX. That's another exchange. They've done a sponsorship deal with the Brisbane Lions. So out of 18 teams, that's now 4 that will have crypto exchange logos and different other asset branding in the club rooms, and on the sponsorship like signs behind when they're doing press conferences, on their uniforms. So again, just like making Australians just more aware of what cryptocurrencies are, and where I guess the most reputable exchanges are to go. I definitely have noticed a lot more sponsorship in sport, in particular, in not just in Australia but globally this year. There's just been, it's like gone to the next level. Like you've seen stadium renamed into like crypto exchanges buying stadium naming rights. In the US, there's been a few of those, and just some really high profile athletes getting endorsements and whatnot from different crypto exchanges, just trying to get their name out there and really to try to get market share and really target, I guess, non-crypto native audiences, because ultimately that is the only way that the industry is going to expand, is to kind of bring in people who aren't native to the space. So yeah, it was an exciting development there. FTX, they're actually one of these companies that has just gone absolutely bananas in terms of just their advertising push and sponsorship push in 2021. And I dare say there's going to be a lot more of that next year, because they are reportedly seeking to raise $1.5 billion US in funding at a valuation of $32 billion. It's just remarkable to see the growth of FTX, who have only really existed for, I would say 3 years max, maybe even less, to be honest. And seeing their growth has just been phenomenal. The funding round would potentially value FTX at $32 billion, as well as FTX US, which is a separate entity, at $8 billion. These reports are saying from the information here was the publication that started this story. And I had to look twice at this, because it wasn't really long ago that FTX closed a Series B1 round for they raised $420,690,000 from 69 investors, which I thought only just happened a few weeks ago, and it was 6 weeks ago, and now you've got reports that they're raising again. So I dare say there'll be a lot more sponsorship deals with sporting teams and that, but I think the M&A activity will really ramp up next year. You've seen M&A activity in the crypto space already have an uptick in 2021, so mergers and acquisitions. They've been led a lot by exchanges, because they are like really the biggest entities in the crypto asset space, and they have so many, I guess, branches that they can expand into, whether it's custody, whether it's OTC, whether it's institutional services, whether it's prime brokerage. You've also seen some different sort of plays to do with portfolio trackers and more, I guess, consumer-facing apps. So I think FTX purchased Blockfolio last year. Binance was another that purchased CoinMarketCap last year as well. And that's just crypto native acquisitions. And I'm thinking next year we might even say that go to the next level in terms of, could an exchange purchase a traditional bank, or even a traditional, retail broker, perhaps. I think the first one to do that will make an enormous splash, and it will be a historic announcement that would be looked back on in decades to come. But with the amount of money they're raising, it definitely, sends me a signal that this could potentially happen. And if it did, it would kind of just be a huge, just validating moment for the whole industry, and just a real sign of just how much it's growing up. I did just want to cover NFTs here. The past 4 to 5 days, I was looking at some data before this, has been about the same volumes as the Thanksgiving weekend that we had recently at the end of November. So it's kind of gone back to, I guess, relatively quiet terms. However, I think overall for the whole year, the NFT space, as we all know, has exploded, and every day, Nathan, our senior research analyst at Collective Shift, and myself, 3 days a week with him, we're going through these project discovery reports for our insider members and pro members. 5 days a week, myself chipping in 3 days a week, and we're finding new, not just NFT collections, but importantly, like NFT infrastructure, I guess, companies, which are really going to, in my opinion, really help bring in the masses next year. So we're talking about, NFT display solutions, crypto wallets that are really working, and really bringing out new ways to purchase, buy and sell NFTs and display them. And then obviously you're seeing the more established incumbents like Twitter working on solutions that can integrate NFTs into their own existing platform. So, Nathan and myself are seeing that like every day in those types of reports. And even if the sales volumes are dropping, I think just the innovation has never been, and the funding importantly has never been stronger. So with that said, there was a significant, and I believe a record NFT sale. It was 91.8 million. It was a record NFT sale with respect to a single, an artist, like an individual artist. So it was Pack. He goes by the name PAK on Twitter. He's an anonymous, or they are an anonymous artist, and they sold it for 91.8 million, which was the largest ever art sale by a living creator. What was this NFT? It was a collection that was sold on Nifty Gateway, which is an NFT, I guess, marketplace and platform, which is owned by Gemini. This collection was a sale of 966,445 digital tokens, or they're called unit of mass in this case, and they sold for 91.8 million. So just to see that be the largest ever sale of a living creator, I'm not just talking about the NFT space, I'm talking about in history of any art ever. And that just happened, I think, yesterday. So these hundreds of thousands of tokens comprise a project called The Merge, which is, by, as I said, the mysterious artist called Pack. Each individual token is designed to combine with other tokens that might be in a buyer's digital wallet. For the sake of this market update and news update, I'll leave it there. But this is something that we might update members on if it does continue to, and in my opinion, it will continue to kind of grow legs and mold into different kind of forms. I think you typically see with Pack's projects, he doesn't just drop them. They always kind of tend to build upon them in the months afterwards. So quite vague there, at least the description that's in this article. But I'm keen to learn a bit more about how this project works and what kind of value propositions it has for all of these 266,445 digital token owners. Moving on to the crypto asset markets, and as I said, I think it was late Saturday afternoon, Australian time, we saw quite a precipitous fall in the price of Bitcoin and all other crypto assets. over the space of about 48 hours or so, Bitcoin did drop from almost 58,000 to some exchanges. It was about 42,000. Some it was a bit lower, like very, very briefly. That was all a cause of just a flush out of leverage in the system. So you typically see this. You've seen this a lot. I've seen this a lot this year. I can't really remember the last time it happened. It could have been the start of September. Really, it's just a flush out of leverage. What do I mean by that? It just means when there's a lot of traders who are borrowing money to, put on positions and speculating on the future price of Bitcoin. And when there's like a strong volatility in the market, it can cause them to automatically, I guess, be closed out of their position, where they essentially are forced to purchase back at a lower or higher price than what they originally put down. And that is basically called a liquidation. And then you see this cascading effect, especially in, illiquid markets. Or even relatively illiquid, which is in the crypto asset market, happens a lot on the weekends. So this did happen, as I said, late on Saturday, when there is like not really that much liquidity in the market. It can kind of cause that cascading effect of liquidations to be a lot more severe, just because the order books aren't as, I guess, aren't as large, and there's not enough volume to kind of soak up these heavy sales or these heavy flash sales. There were also several conferences on the weekend, which may have caused some traders to put down their laptop and maybe attend the event. That could have been another reason why there was like a really illiquid markets on this weekend in particular. But for those of you who were at home, it was a very opportune time to really buy that crash. I know I did happen to be home just in time before I did head out, and I was one who did buy some more ETH in this case, when it did go down heavily, just because it was such an obvious signal of that it was not really driven by any fundamental news. It was more just driven by a technical correction in the leverage markets. So what we've seen in recent days? We've seen just a pretty strong bounce back. It's kind of been assisted by this fears being kind of easing with respect to the Omicron variant not being as severe as first thought. As I covered, stocks have really rebounded strongly in the past 48, 72 hours. And so that's really kind of been an accommodative kind of environment for crypto assets as well, to kind of keep them bouncing strongly off of this heavy sell-off. So Bitcoin at the time of recording is back above 50,000, and is back above that 200-day moving average, which it periodically went below that 200-day moving average for the first time in several weeks. Let's just look on the chart here. The last time Bitcoin was below the 200-day moving average was the 1st of October, back when prices were about 45,000. So keeping above that will be super important for anyone who's hoping that the price goes higher. Bitcoin has to stay above this 200-day moving average, and ideally it will reclaim the 100-day moving average as well as the 50-day moving average. In terms of the relative strength index, the RSI, that did get into oversold territory, or depending on whether you say it's below 20 or below 30, it did touch 30 very briefly, at least on Bitstamp, the exchange I'm referencing here. And it's still pretty weak in terms of not quite in oversold territory, but not too far away from it, at least on the daily time frame. So definitely still some room for Bitcoin to really go on another strong leg higher. And if it did go down another leg strongly, I believe that there would be enough capital still on the sidelines that would buy that dip. Of course, that would depend on what would cause that crash. If it was another similar thing, then that's when I would still expect there to be a strong buying into any sell-off. And that's basically what we have seen as we've been covering on the member platform. And Checkmate in particular has been doing some great work in terms of trying to figure out just who are these people who are selling and what is their profile. Are they long-term holders of Bitcoin? And the answer really is no. And when that's the case, that's definitely, like, personally, I get a lot of confidence when I hear Checkmate say that, and it kind of makes me, I guess, a high propensity to really, I guess, be more confident and purchase. That is why I purchased more ETH on the weekend, is because I knew Checkmate's analysis, and he had been saying that, you know, the long-term holders really aren't really the ones that are selling here. So that's really a good example where you can kind of blend in on-chain analytics into investing in Bitcoin and Ethereum and other kind of crypto assets. Looking at ETH here, it has been performing relatively strong compared to Bitcoin, and it's actually at the moment touching the 50-day moving average, and it is above the 100 and 200. So again, the picture there is just quite a bit more favorable for ETH if we're comparing it to Bitcoin. On the RSI, it's up at 51 compared to BTC's, which is 35. And yeah, just as you can see here, this wick that we can see, ETH went down in that 48-hour period from 4,700 down to 3,400, 3,500, and that wick is a lot more pronounced there compared to Bitcoin's, which is less so. So it's almost a reflection of how much more demand there was for that sell-off. When ETH sold off, there was a lot more money waiting to go back into it. At least just if you're comparing it in that metric alone to BTC. We can see this, I guess, stronger performance really pronounced here on the ETH to BTC charts. As I've covered last week and potentially the week before, this is like a trend that's very, very noteworthy, because all year really, ETH and BTC have kind of moved in lockstep, really. Sometimes BTC has gone through a period of outperforming ETH. And if I just fix my charts here, we are seeing the ratio. So it is now at 0.86, the ETH to BTC pair. And that is actually the highest since if for anyone listening to the podcast, I'm just scrolling back zooming out on my chart, and I cannot find where it was last. I have to go back so far. I'm going to February 2018 is the last time the ETH to BTC pair was this strong, I guess, in favor of ETH. So just very, very notable there. And will that continue? It's definitely in kind of just uncharted territory, at least as recent history goes. But yeah, it's a very noteworthy trend that I did want to share with you. It's more important, this kind of chart, for traders. They really kind of like to follow this, but I like to follow it more just because it gives me good insight on the sentiment of, I guess, the overall, all the crypto investors combined. And yeah, in this case, it's a lot more kind of warming towards holding or investing in ETH compared to BTC. That's what this chart's telling me, at least. And it was very significant, notable on the weekend, I guess, just how quickly ETH bounced back compared to BTC, which is what this chart is just another representation of that. Rest of the week, what is the biggest thing that I'm paying attention to? It's without a doubt, it is this hearing in Congress tomorrow in the US. So there's a bunch of CEOs and executives from the crypto asset industry in the US. So we've got the Circle's CEO, Jeremy Allaire, FTX CEO, Sam Bankman-Fried, the Bitfury CEO, Brian Brooks, who's the former general counsel at Coinbase, and he was formerly the OCC, the head of the OCC in the US, or the Office of the Currency, or Commissioner of the Currency, something like that. The Paxo CEO, and someone from the Stellar Development Foundation as well, their CEO. And finally, Coinbase's CFO. So some heavy hitters. This is one of the biggest crypto hearings of the year, to be honest. Like, we haven't had such strong industry representation in a congressional hearing. There's none in recent memory that come to mind for me. And this is why this one stands out so much. It's great to see, like, they're actually moving, actually now listening and holding a hearing to hear what the biggest concerns are with relation to crypto regulation. This one's going to have a heavy focus on stable coins, which are increasingly getting the attention of regulators in the US. I'm hoping that it will also have some material or some discussion on decentralized finance, or DeFi, which is, out of all the sectors in the world of crypto, it's probably the one I'm most concerned about with respect to. It's probably the one that's got the most, I guess, regulatory scrutiny over it at the moment. So I'm definitely going to be looking to see if any concerns about DeFi are mentioned tomorrow and, I guess, elaborated on. These sorts of hearings are just, like, so important to pay attention to, because they really capture, I guess, the mood of regulators and the overall, I guess, attitude of them in relation to this industry, and I guess their willingness to, I guess, work with the industry to really create more, I guess, regulation that is, I guess, in alignment with growth of the US, and then also is one that would be accommodative to the US crypto industry. So hopefully, there's some promising discussions in this hearing tomorrow, and if there are any more, I guess, comments made by US officials outside of this hearing, sometimes you do see that as well. That might have a impact on the market, depending on what those comments are. In particular, Gary Gensler, the head of the SEC, he's been commenting a lot lately on DeFi in particular. So that's what I will be looking for over the next 24 hours. I think it is on Wednesday Eastern time. But yeah, apart from that, I've seen Ethereum gas fees have actually dropped to, I think they were 50 today, which is the lowest I've seen. 50 Gwei, that's the lowest I've seen them in quite a while, which is more of a reflection of continued uptake in layer 2 solutions, and then also just more usage on other blockchains like Terra and Solana, Binance Smart Chain, and many other smart contract platforms. So that's also something I'm noting at the moment, as well as we head into the rest of the week. So for any of you who have been meaning to make some transactions on Ethereum, maybe even to buy an Ethereum name service or a domain, an ENS domain, this is probably a great time to do that, because gas fees are the lowest I've seen them for quite some time. And yeah, just a reminder here with Checkmate's on-chain analysis has really been a real winner with amongst members and myself. I've been a big fan of it, with him just, I guess, really explaining what's going on in terms of the market, I guess the cohort of holders of Bitcoin and what their patterns of behavior are, and what that means for us as investors, and really helping us all make decisions based off of this data, which he is just world class at parsing apart and interpreting into kind of actionable insights. So yeah, a lot going on as always at Collective Shifts. I do want to also mention just that we've also just recently changed our Twitter handle to cshifts_IO. So for any of you listening to the podcast or watching online, it would be much appreciated to give us a follow. I think you can just type in twitter.com/cshift. That's HIFT_IO. So that would be much appreciated. And also, if you haven't subscribed to the YouTube channel, a subscribe would be much appreciated as we get this out, ramp up the content moving into 2022, and to really get our name out there amongst the industry. Very exciting times. Super proud of the research team and all that we've been doing, and so many exciting developments as we wrap up the year. So I will leave it there. I hope you all enjoy the rest of your week.